Welcome to the Contractor Success Map podcast. I'm your host, Bradley Hart, and I'm an expert on how you can get the most out of your contracting company. The reason I designed this show is to help you turn your contracting company from a people-dependent money pit into a process-dependent cash cow to have the freedom you dreamed of when you started your business. Every Friday, we're releasing podcasts with information to help you get the most out of your contracting company. Be sure to join us at www.contractorsuccessmap.com. and subscribe to receive our latest articles and special offers. And the best part, it's all free, just for you.
Hello there. Welcome back or welcome to our podcast. I hope you are doing great and in excellent health. This is Norhalma, delivering our 517th episode by Sherry the Heart. You can listen to the other sessions on iTunes, Spotify, or wherever podcast content is published. It's non-sequential. You can listen to the topics that interest you the most. Sherry's post is entitled, How to Weigh ROI versus Cost When Making a Business Purchase. Let's get into it. Deciding to purchase something to help your construction business is a big decision. It can be challenging to part with hard-earned money, especially in the early days. To understand the right time to invest by purchasing something for your business, you must calculate whether the return on investment, or ROI, would be profitable. The cost is the money you spend making the purchase plus any indirect cost, such as training cost, related to the purchase. The ROI is the calculation of financial gains or benefits that you obtain due to that cost. To determine ROI profitability, there is a simple formula you can use. If the purchase yields a positive return, it can be considered profitable. However, if the purchase does not earn back the money it cost, it would be considered a negative return on investment. Return on investment formula. Using a formula to calculate the ROI only offers a rough initial estimate. Other factors might come into play, such as future work you will get because of the new asset or unforeseen expenses. The formula to determine ROI is ROI equals net profit divided by cost of investment times 100. Let's see an example. Suppose you run a spec home building company. 3 employees spend their time in the field gathering data and taking stock of how a proposed development project would affect the landscape. Vegetation, waterways, animals, everything is taken into consideration. You have one client who would like you to survey very rugged terrain. They would pay $2,500 if you could complete this work, but covering the landscape would be difficult and take time. The only way to do it effectively would be to purchase a drone for $1,000. It would cost $200 to train each employee how to use the drone. The new equipment would make taking on this work possible and save many hours spent physically in the field. Additionally, having a drone would mean you could offer your new aerial surveying services to the other clients who are undertaking more large-scale or complex projects. Calculating the ROI of obtaining new equipment for this project. First, you would tally your total expenses and expected revenue to decide whether this purchase would be profitable. Expected revenue, $2,500. Total expenses, $1,000 plus $200 times 3 equals to $1,600. Then, you would subtract the expenses from your expected revenue to determine the net profit. Net profit is $2,500 less than $1,600 equals to $900. To calculate the expected return on investment, you would divide the net profit by the cost of the investment and multiply that number by 100. That leads us to 56.25%. Your return on investment would be 56.25%, a positive return. Not only that, but your new equipment may allow you to gain more work in the future, making your ROI even better. What happens when you don't put your investment to work? What if you purchase the drone but find the learning curve overwhelming and it collects dust in a corner? In this case, your client may not hire you, or the hours required to do the work on foot may make taking on the project cost prohibitive. Your ROI would be zero, plus you would be down $1,600 from the initial expense and training. This would result in a negative return on investment, mainly if you have already performed the employee training. On the other hand, how many places can you find with a strong chance of 100% return on investment? Let me say, if something seems too good to be true, it probably is, and you should stay far away from it. We do like managed risk. This is anything we can control the input and have a more remarkable than the break-even chance of making a profit. We pay close attention to the higher levels of math and how it is used to predict probable outcomes accurately. Decision modeling. Decision modeling uses reliable QuickBooks reports to generate predictions of profit and loss based upon reallocating resources and aligning your business process management system processes to present to you a variety of possible outcomes. It offers you a way to attach knowledge, expertise, and analytic insights. As possible results are analyzed, decisions become easy because the goals, processes, and data come together. As contractors like you move away from gut-level decisions and begin relying on your construction accounting systems to provide helpful financial and job costing reports, it will open a treasure chest busting at the seams with practical knowledge, which can lead you to earn massive profits and, by extension, increase your wealth exponentially. Knowledge leads to profits and cash flow. What makes knowledge powerful? Use of knowledge. If you could harness and truly understand even half of the information in your existing QuickBooks company file and truly understand it, you could quickly become wealthy, debt-free, and live the lifestyle you deserve in 5 years or less. Final thoughts. While making a large purchase to benefit your business can be daunting, significant rewards often come with taking the plunge. Do your research, calculate if the investment is worth it, and then move ahead confidently. If you calculate correctly, you will find that your purchase takes your construction business to new heights. And that ends Sherry's blog post. Want to chat about growing your construction business? Please don't hesitate to get in touch with us. You can always email Sherry at Sherry at fasteasyaccounting.com or call her directly at our toll-free number 1-800-361-1770 or local Washington State phone line 206-361-3950. Our podcast promo code is still available for you to use. Whether you need a bookkeeping template or you would like to enroll in one of our construction accounting classes, you will get a 20% discount if you use our promo code podcast20, PODCAST20, podcast20. Links to our online store and academy are in our blog. On behalf of Sherry and our team here at Fast Easy Accounting, this is Norhalma. Thank you all for listening. Stay safe and healthy.
And stay tuned for upcoming episodes on how to turn your contracting company into a process-dependent cash cow. Bye for now. Thanks for tuning in. You're listening to the Contractor Success Map. If you enjoyed the show, please leave a 5-star rating and review here on iTunes. And make sure to head over to www.contractorsuccessmap.com to subscribe to receive the latest articles and special offers. If you'd like to discuss your business strategy, simply click on the button labeled Strategy Session. And the best part, it's all free, just for you.